GDP data out today shows that the UK GDP year-on-year has had a surprising upwards revision. The data out this morning rose by plus 3%, with the month-on-month data rising plus 0.6%. GDP and other data points to a strong year for the British economy, with business surveys, car sales, retail sales and falling unemployment all rising. I'm Jessica Walker and I'm joined today by Ian Steward from Deloitte. Welcome, Ian. The British economy advanced plus 3% on last year's 2.7% year-on-year data for 2014, and UK GDP formed a 7-year high. It looks like the UK economy is all steams ahead. However, is the increase something for us to get used to? And with the UK elections nearing and the obvious pressure for a stable economy, will the GDP rise continue? Or is fears that the upcoming elections could heighten the volatility of the currency something we should be wary of?
I think the UK recovery has quite good momentum. What we're seeing is broad-based growth in activity coming particularly from exports and the consumer. And we also think there's a fairly decent recovery taking place in investment. We expect that to continue through 2015, and with growth running at around about 2.8%. So the UK is likely to be one of the faster growing major economies in Europe. And I think although there is likely to be uncertainty around the outcome of the general election, I don't think that's materially going to change the path of the economic cycle. So I don't think that the outcome of the election will mean a significant change to what is basically a fairly positive outlook for growth. What I do think is that you are likely to see greater volatility in financial markets and foreign exchange markets in the run-up to the general election, and depending on the outcome of the election for perhaps some time after the election itself.
Sterling has been struggling against the dollar for several months. As expectations grow of interest rates rise in the US, the sterling is expected to strengthen in light of data out today. So do you think there will be a positive knee-jerk reaction from the data that will cause the sterling to react stronger against other currencies?
Well, I think the general effect of strong economic data out of the UK is obviously supportive of sterling and supportive of the notion that the Bank of England may have to raise interest rates rather earlier than expected. Clearly, the big story in the global economy in the last couple of years in terms of foreign exchange is the strong rise in the dollar. Obviously, the UK and the sterling has, as a result, seen a sell-off against the dollar. But on a more broad-based assumption, looking at trade-weighted sterling, it's back to the levels that were applying in about 2008. And I think as an economy with relatively good growth prospects, which is likely to raise interest rates within the next year or so, my guess is that sterling will probably continue to make some headway, particularly against the euro.
The figures show that growth is being led by investments and exports, both of which rose by over 5% in the year-on-year final quarter of 2014. This is extremely reassuring for the economy. However, with 45% of the UK exports going to EU member states and a question mark looming over the possibility of the UK leaving the EU, could this jeopardise the growth in exports?
Well, I think the chances of the UK actually exiting the EU are probably well below 50%. I mean, whether or not the Conservatives form a government, I think that if there were to be a referendum, most of the main political parties would campaign in favour of continued membership, as I suspect would a large portion of business and the media. And my guess is that the result would be a vote to stay within the European Union. So I think prospects for UK exports are fairly fairly positive, given that we are seeing at last a cyclical recovery in the UK's main export market, the European Union. Clearly, sterling has appreciated materially against the euro, but from a fairly low base. So my guess is that the UK's export performance will be slightly better over the next couple of years than it has been over the last couple of years.
That's great, thank you, Ian. That's all for today, but be sure to check back tomorrow when my colleague Sinead will be looking at the Chinese PMI data release. Goodbye for now.